Crypto Pulse Weekly. I'm happy to have you. Today, as usual, we'll be talking about, the things that are moving the markets. We'll talk about crypto technical analysis and have an analysis on what's happening as regards Bitcoin, which is the reserve currency, current reserve currency on the markets. Sorry about that. That was feedback from Facebook Live. Yeah. So let's get started. So as usual, we'll go through our crypto market review in terms of news. Then we'll go through the vital signs. Today, I would spend some time trying to explain for newcomers and some people that have already joined on the issue of the halving, the crypto market cycle, and some aspects of DeFi. I think it needs some further explanation. So let's get started. In terms of market update, as you probably are aware already, we've had a very bumpy 10 days, I'll say. There was a market crash, not exactly a crash, I'll just say correction, to be honest. A crash would be something like losing 100% or 80% of the market value. So let's say it's a healthy correction of the markets, and that's happened since the beginning of the month, essentially. So to date, we've lost about 20% of the market capitalization. A number of things have been responsible for that. One of them is the technical analysis of Bitcoin itself. Secondly, the USD strengthening on the back of the Fed's minute meeting of the end of August. So the strengthening of the USD, US dollar on that particular week and other constitutional factors actually contributed to the drop. Then lastly was the issue of the DeFi blowouts, not the DeFi blowouts. I would say the high yield investment DeFi blowout. So for people that might not be aware, that there came some high yield investments into the market as around July, and they were based on the premise of decentralized finance, offering significant returns for people who provided liquidity. I'll talk about that later. But what eventually happened was that a lot of that money was pulled into some of these new coins. And because most of them were on the Ethereum network itself started getting congested, and transaction fees were going through the roof. So there was bound at some point to be some, sense checking of the markets. So, but what has happened is since the market dropped, there's been a lot of caution because initially people are saying, well, we're going to get to 9,006, we're going to get to 9,000. Then some people are saying, no, it's going to go further down. But I remember posting on our WhatsApp group that if the market dips below 9,000, it's a good time to buy. And I say with my chest that it's a financial advice. And the reason I say that is because, as I always say, you need to step out of the day-to-day volatility and look at the big picture and see where we are in the market cycle. That will give you a very good appreciation of what is going on, because without that lens or without that view, you might get caught up in the noise of the markets. So because of that, there's been a lot of caution because the technical analysis on Bitcoin right now is ambivalent. Ambivalent meaning it's showing both bearish and bullish signals. So on the short term, which I'll show you in the technical analysis, it shows that the market looks bearish, but on the long term, when you look at it, it looks as if we're still very much in the bullish zone. But we'll talk about that when we get to the aspect on the crypto checkup. So let's go to the next thing. The next thing was the buzz around the high yield DeFi that I told you about. So this high yield DeFi coins like sushi, yam, hot dog, all sorts of funny food names came up in the last 8 weeks. And you could see those coins or those tokens raking up 1,000% within weeks, some of them within days. And of course, it pulled a lot of volume into those decentralized exchanges, one of which was Uniswap. And subsequently, people started making clones of that kind of exchange. And then you had the sushi saga. The sushi one was very spectacular because they basically copied and pasted the Uniswap infrastructure and told people that instead of you getting paid a fraction of the transaction amount in Ethereum, you get paid in a particular token. And of course, all of a sudden the token disappeared. Oh, well, not the token did disappear, but people started pulling money into it. Then after getting to a market capitalization of about $1 billion in 1 week, people just found on the blockchain that the creator of that token had converted all the sushi to Ethereum, almost $14 million, and took it offline. But I think because of outcry and a lot of noise, the guy has come back to say he's bringing back to the foundation. It was a mistake, blah 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 blah. I don't really want to go into that news because we sort of knew that was what was going to end the saga. But it's important to note that there will be a lot of enticing offers in the days and the months to come, and it's very pertinent that you keep your eyes on your tokens and your coins, and don't trade them cheap for some shit coins or new buzz on the markets. So having said that, the sentiment still remains that Bitcoin has an indeterminate direction right now. People are waiting for the next 2 weeks, and I will explain. I think I can explain why they're waiting for the next 2 weeks later. But let's go on to other news. In other news, our beloved Crypto.com has joined the DeFi saga. They've launched a DeFi exchange. Basically, they've converted their crypto wallet to a DeFi capable crypto wallet, meaning that wallet will now have the capability to function like Uniswap. If you know Uniswap, Uniswap is a DeFi wallet that promises decentralization. So it is decentralized. It allows people to carry on transactions without a central market maker or an exchange. So the exchange is pretty much automated. I think I have some slides to talk about that later as well. What this means is that they've provided options for farming, yield farming and swapping, and they provided options for people to bring in their coins and provide liquidity and also to sell and buy. What this connotes is that you now have competitors in the space like Uniswap, Uniswap, SushiSwap, LiquidSwap, which is the one from Binance, and then CRO now. Basically, everybody's trying to get a piece of the pie. And the reason this is very enticing, let me use that word, is because the current setup for cryptocurrency, as we are going into mass adoption, it means that governments can begin to try to poke nose into people's affairs to find out, where they've been making money in the crypto market based on the current setup of centralized exchanges, where you, in most cases, have to do your KYC and then a number of other things that gives away your identity and all that. So because of that, the very skilled crypto developers have provided an alternative, which is decentralized finance, essentially saying, you know what, we don't need to know you. Just download the decentralized app, connect your wallet from wherever you are, and make your purchase. It's almost like buying at a black market, as I said last week. So because of that, it's getting a lot of interest because, of course, a lot of people want to carry out their transactions without the government. And people like China and North Korea that have rich guys trying to warehouse their money or try to get their money out of the coffers of the government, it becomes very attractive for them. So this is part of the things that's driving the current hunger for DeFi and decentralized exchanges. So Crypto.com is joined the party. On the back of that, I think our dear CRO has done 5% already today. And I think that's a good thing because I know that they have other, announcements to make, but this, in the midst of a seemingly red day, you see Crypto.com doing 5% against against the markets and against even against Bitcoin itself. So that's a good news for holders of CRO token. Like I said, if you hold CRO token, please hold your CRO very dearly, because CRO may be selling at $10 to $20 in the next 1 year. So it's important that you have that perspective, regardless of what the market is saying today. So very good news for the CRO crew. I can see some people already are updating their wish list. It's a it's a good season for CRO, and because there's no MCO to compete, all the value of this initiative goes to CRO alone. So moving on, Huobi Global, as many of us will know, Huobi Global is one of the biggest stock exchanges in the world. They're in Asia, and they probably have, at some point, they had the largest market capitalization in terms of, trading volumes before people like Bittrex, Bitstamp, and Bitmarks, and all those guys, and Binance. So they're leading exchange, very popular in Asia. They're now making moves to buy an IoT crypto miner called MX2, MXC Pro. Now, what they're doing is essentially diversifying their own, investment portfolio and their business. But this is also going to intensify the, if you will, Bitcoin gold rush. Let me use that word. As I said about, I think 2 weeks ago, there were a number of guys in the US that were buying up acres and acres of land, trying to secure infrastructure for mining. And I did mention at the time as well that countries like Iraq, Afghanistan, Kazakhstan were actually deploying national resources into mining Bitcoin. So it's a race to finish, or it's a dash to finish. It's going to become more expensive because of that. Because think about it: if the amount of power you require to set up a node to mine Bitcoin was, let's say, 1,000 kilowatt hour in 2017. This year, you required almost like ×2 of that. One, because the amount of transactions has increased. Secondly, you have more miners. So more miners competing for the same amount of Bitcoin to be shared, and the reward has dropped as well. So it's going to get more competitive and more intense. And because of that, it's going to cycle back to the end users. The reason why a lot of people are selling at, are able to sell at 10,000 now, a lot of miners, is because during the big crypto bear markets in 2018 and part of 2019, the market went as low as 3,000. So people had a lot of gluts in terms of Bitcoin supply at the time. But now that we're having this era of mass adoption, all the supply is going to be used up very quickly, because everybody will be coming in. And think about it. The US market alone has access to about 500 million investors. If we had 10% of that in the crypto market, that's double. In fact, what am I saying? 2 times the amount of people that are, investing in cryptocurrencies right now. So it's going to be very, very. I'm excited about 2021, because we thought 2020 was going to be the year, but of course, Corona happened and everything is scattered. But I'm excited about what 2021 holds for cryptocurrencies and the crypto market, because there is an impending wave of adoption coming. I won't say more than that for now, but definitely it's inevitable now. And you look back in the next 5 years, like I was telling someone, I said, if you want to retire, if you want to work for the next 20 years and retire, you can continue trading your stock and your forex and everything. Then you eventually retire and be fine. But if you want to retire next 5 years and never have to work again, then I think you should be involved in crypto. And the person was like, "What do you mean?" I said, "You don't understand what I'm saying. Now, if you understand what I'm saying, you understand the gravity of that statement." It's like telling people in 1996 that you should invest in the internet. Let's just use that advantage. And telling them in 1996, or let me say 99, that you need to invest in the internet, or you need to invest in Amazon. Let's take Amazon, for instance, and Tesla, because very soon you're going to find out that businesses will be happening on the internet. And because of that, companies like Tesla will be able to build electric cars. It will all sound very outlandish at the time, but look at look at where those companies are now. Look at what the valuation is. So in the same way that we have the internet come and take over the landscape of business and commerce, blockchain is going to take over the landscape of business and commerce in the next 5 to 10 years. It's not a prophecy, it's a fact. So if you're already in the markets, you start an advantage of making supernormal profits. Like the economics you say, you have the opportunity to make supernormal profits when there are limited suppliers and the demand is overwhelming. So in the same way, where we're standing at today is on the precipice of being able to make supernormal profits, because mass adoption is going to come in. Most companies will start using crypto. Most countries will start using crypto. And then many of the assets that we see today and we're buying in cents and dollars, they will be in tens and thousands of dollars. Think about it. Bitcoin 10 years ago was selling less than a cent. And today it's over $10,000. So whatever crypto assets you have, I would say if you don't need the money, even if you need the money, I will advise you, consider alternative sources. Having said that, on to the next news. The US Senate rejects stimulus bill without some individual payouts. I'll explain what this means in terms of impact on the market. So as you'll be aware, the government of the United States has been printing a lot of money, and they've passed 4 stimulus in the month of, I think that was May, and we saw the effect in the market. I think that it will suffice to say that we felt it on the market. On the average, altcoins did 100%. Most altcoins did 100% plus on the average between May and the month of July, or even between May and June, May, June, July. So there was another round of stimulus that was supposed to be passed, and the Republican guys were trying to be smart to pass it to only, the mega businesses and their own guys. But the bill got rejected because it didn't have provisions for individuals and SMEs. So most likely, the bill is going to get revised and then get brought back. I can tell you that the day that bill gets passed and it has provisions for individual payouts, you'll see drama on the markets, guaranteed. Because the last time, most people took the money and went to the stock market and Bitcoin and just bought Bitcoin and stock. Or well, most people bought Bitcoin, some older people bought stock. I have that data somewhere. But even on Coinbase, I think Coinbase had that data as well, that showed that the amount of people that invested $1,200 in the month of April and May, it was very funny. It was very astronomical, the amount of people that actually took that stimulus package and went to invest it. And as a matter of fact, I think most people that invested at the time made 50% of their investments. So let's go on to crypto vital signs. I think we have a lot to discuss today, and I think I've taken some time already. Our usual analogy of the equities markets. The equities market is still growing. It's gradually approaching 40 million. The New York Stock Exchange itself, it's about between 21 and 23 trillion. If you look at that market, the New York Stock Exchange is going to expose 500 million plus customers to the crypto market. So if you're familiar with the equities market, you know things like Bakkt and Chicago Mercantile Exchange, who are trading futures and derivatives for various commodities. They started trading that at the beginning of the year. So now you have futures and derivatives being traded for Bitcoin. And it is this derivative market many a time that is causing the kind of volatility we're seeing in Bitcoin at some point. And it is this kind of derivatives that the institutional traders are involved in that is causing Bitcoin to react to the US stock market, because now institutional money is tied to Bitcoin. Like I explained last week, what the institutional traders try to do is to use Bitcoin to hedge their stock position. So a very typical example, an institutional trader buys Tesla. Let's say he buys Tesla for 300 on a short-term trade. Tesla goes up, he makes some profit, banks some profit at 350 or whatever the price goes to. Then all of a sudden, last week or week before the last, Tesla crashes. Now, he's going to be holding his position as an institutional trader because, of course, they have deep pockets. But if his position size is very large, he will quickly come to the crypto markets where he already has position on Bitcoin that's going up already, or is always going up in the bull markets. Take out his funds in Bitcoin, shove it into the stock market to consolidate his position so that it doesn't have to close out at a loss. So when the stock market stabilizes and recovers back, it removes the money and brings it back to the cryptocurrency market. So that's been happening since, to be honest, that's been happening since the beginning of the year, since they started, officially getting involved in the market. So because of that, you will see shock waves that go across the markets, affect the cryptocurrency markets in the short term. In the long term, it might not be as effective because by that time most people will have adopted Bitcoin. So what's happening right now is the institutional traders, when they take out their money, they have counterparts who are also waiting to buy at lower prices. So the same way the price was at 12,400 just 2 weeks ago or thereabouts, and you had guys who had pending orders to buy at 10,000. Immediately the price dropped to 10,000. The market picked up those Bitcoins at 10,000 and swallowed them up. And the reason I know they swallowed them up is because the price has refused to close below 10,000 since that time. So in our analysis, between now and last week, the crypto market cap has dropped by about 2 billion. Altcoins have dropped by about the same amount. It means that we're still not recovered from that drop that happened at the beginning of the month. But on a general note, we're still in the bullish market. It's just that there's a temporary correction that's going on. So let's get into technical analysis. Today, I'm going to be looking at the daily, the 3-day, and the weekly chart. And I'm going to try to explain that in a simple manner as possible. So for people who are not familiar with things like this chart is a daily chart of the Bitcoin price against the US dollar. Those red and green stuff that you're seeing are candles. They're called candles. They are indications of the price action every day for Bitcoin versus US dollar. The red candles indicate the day which the price closes lower than the open. The green candles indicate the days where the price closes higher than the open price. So the close price at the end of the day was higher than the open price. That's just the basic of how candlesticks work. So you can see that if you have a lot of red candles, the trajectory or the trend of the graph will go down like you have here around the beginning of the year up until March. Then if you have more green candles over time, you see that the trajectory is up. So right now, the trajectory has been up since that time that it dipped in March. We're here right now. This is today's chart. And as at the time I took this screenshot, it was about 10,300. That was the price at the time. This was the drop we suffered at the beginning of the month. And as I said, it was a healthy correction because if you look at what has happened, when the market broke out around July, we gained about 2,000 plus in the price of Bitcoin. So anybody that was involved in the market here, which is 9,000, will have made roughly about 25 to 30%. And of course, you will have expected that at some point there will always be a correction. Prices do not move in a straight line for any form of securities. Prices never move in a straight line. It always goes in a zigzag format, and that's what's happening here. Now, the reason I brought this daily chart up was because I needed to see what's happening. So there's something called trend in the analysis of markets and securities. It tells you what direction, generally speaking, the market is going. So if I were to take a look at these charts, what it tells me is that we were originally going in an upward trend, an upward trajectory, until we got here and it broke down. But as it broke down here, ordinarily with this kind of setup, you'll have thought that the market was going to crash deeply and come back to maybe somewhere around here before recovering and going on. But it has stayed here for 1, 2, 3, 4, 5, 6, 7, 8. Over a week, the market has refused to break 10,000. It tells us that 10,000 is a very strong support level. Support level meaning there is a cluster of demand to buy Bitcoin at 10,000. So any price, the price gets to 10,000, it jumps back up. And that's why you have these wicks at the bottom of those candles. The price jumps back up to close over 10,000, meaning a huge demand is sitting at 10,000 to buy. So no day has been able to break 10,000 since the market crashed over a week ago. Why is that significant? It's significant because the more tested a particular support is, a support is a cluster of demand, an area on the price where there is a cluster of demand. So here, there's a cluster of demand to buy at 10,000. So this support is holding because there's so much demand there. So the number of times a support gets tested determines how strong that support is. I'll give you an example here. Here was around mid-June, July. It was around July. The market also was testing the 9,200 points for a very long time. And when it didn't succeed in breaking up, then the sellers adjusted their prices up. And so every subsequent buyer had to buy at higher prices and the market goes up. So now the market has broken out from the downward trend into what you call a ranging market or a sideways movement. And that's what's happening now. So you can see the market is trading tightly between 10,500 and 10,000. Now I'm going to show you the 3-day charts for more insight. Now this is the 3-day chart for the same commodity, Bitcoin USD. Now in this 3-day chart, it gives you a view of something, clearer. If you were to draw a line across this, you will see that it's almost like we have a trend line forming on the 3-day chart below this. So if you are looking at the 3-day chart, you could say that the price might be about to correct and go back up. Secondly, the 3-day chart also shows that there's a cluster of demand. There's a cluster of demand for buying between 10,000 and 10,300. And that is why you can see the price has not been able to break on the 3-day chart. So on the 3-day chart, the price has sustained the 10,000 as well. And it also showed that, the 10,000 region and the 10,400 region has been a very significant resistance in times past, as demonstrated by these tips on the market. Lastly, I'll talk about the weekly charts. The weekly chart is I don't want to say the commander, but is the one that shows you what really is going on the longer term. And as you can see on the longer term, you can see the trend of the green candles and the red candles. On the longer term, the market is actually going up. And that's why I said the market is still bullish, very much bullish. But in the short term, it's a bit indeterminate because of that sideways movement we saw on the daily chart. And it might take maybe another couple of days or another couple of weeks before the market recovers itself. If it keeps hitting on 10,000, what will happen is, and it's not breaking down below 10,000, what will happen is the sellers will start setting their price higher and the price will start to go back up. It means the buyers are winning. Right now, a number of people wanted to sell at 10,000 have offloaded their assets. The people who are willing to buy are still waiting at 10,000. But the market is not going down to 10,000 because apparently, if you are willing to buy at 10,000, you can't buy at 10,000, then you move your price higher to 10,100 or you move to 10,200. So if the market comes down again, there are people ready to take it up. And that's what's playing out on this chart. Sorry if it sounds a bit technical, but it's just a simple represent. It's almost like looking at an X-ray, yeah, or looking at the financial statements. There are some things you see immediately when you just open the chart, and so here, if you look at the chart, you can see that this bottom we had was the one in May, March, and we've been going up since then. Now, we could get into a situation where we get into something like this, but I doubt it. This is about 7 weeks in the month of June, or around the month of June. The price of Bitcoin was not really going too much. It was just dangling around 9,000 until it broke out to 12,000. I don't think we'll have more than a week or two before we'll continue the upward journey. Important to note, headwinds, the stimulus package I talked about earlier on, the tailwind, the US election. So traditionally speaking, most markets gain a lot of traction and momentum within 100 days of the US election. And it's not just the US election, generally significant news that affect currencies and commodities. The institutional traders make sure to pump the market before the time, so that by the time you arrive at that day, if you are trading currencies, you better be out, or else you're going to lose a lot of money. Because what will happen is, whatever happens, the price will just drop. Even if the candidate everybody wants wins, the price will still first drop, then the price will go up crazily, then the price will drop again, just to make sure that everybody that is speculating is wiped out of the market. So singularly because of that, my bet is on Bitcoin going up again, probably to 12,000 or 14,000 before the US election, or even 16. But it depends on whether that stimulus package gets passed on time. If it gets passed on time, then we'll start to see some real action. There's another chart that I missed that I didn't get the time to bring it on. It's called the Bitcoin dominance, or Bitcoin, yeah, it's like Bitcoin dominance chart. It shows the percentage of the market that's in Bitcoin. Usually when the Bitcoin's dominance is high, it's an indication of the bear market. Comparing the beginning of the year to what we have now, the Bitcoin dominance has been going down. It's currently at around 57. Just give me a second. I'll fetch it on CoinMarketCap now. It's around 57, and 56.8. And earlier in the year, it was pretty much sitting at 60. What happens is, once the bull market is confirmed, yeah, this is what I was looking for. So let me show you something. Let's look at 2020. Yeah. So here is the percentage of total market cap versus Bitcoin versus the other majors. So if you look at Bitcoin right now, at the beginning of the year, which is the snapshot we're taking, Bitcoin was 68%, almost 70% at the beginning of the year. But what has happened is, over the course of the year, it's dropped now to 57.2, or 57.14 as of today. And you can see Ethereum was 7%. And you have 12%. Stuff like Crypto.com was even nowhere to be found. Crypto.com was still a baby then. It was 0.2%. Today, it's 0.89%, almost 1% of the market in terms of market capitalization. So what happens in the bull run is that the percentage of crypto starts to drop. The percentage of Bitcoin dominance starts to drop once the bull market is in place. And at the peak of the market, the last run, it was almost like 30% in market dominance for Bitcoin. So as this continues to drop and things like Ethereum and others continue to rise, you will see significant price appreciation. And because people who are already in the market, who are investors, know that you stand more to gain investing in altcoins than in Bitcoin. The altcoin market gets most of the funds coming in, And because the altcoins have less market capitalization and many a times less circulating supply, the price pumps very rapidly. I just thought I should bring that up to explain my earlier analysis. So in terms of our market cycle, like I always say, it's always important to remind ourselves of this psychology just for reiteration purposes. All markets behave this way. This is an excerpt from the Wall Street cheat sheets.com. And it talks about the market cycle and how people behave in the markets based on the cycle of the market. If you look at the top right-hand corner, you see this analysis of the point of maximum financial opportunity and the point of maximum risk. When you have anywhere between disbelief and optimism in the market cycle, that's where you have the maximum opportunity. Where we are right now is somewhere between hope and optimism. Now, very soon, we're thinking the market, it's already showing signs that the market is going to gain. But by the time we get to, I don't want to predict, but I think by the time we get to December, I think by the time we get to December, January, we will be around here. People will start to say, oh yeah, Bitcoin is now, 16K or 19K, and there'll be a lot of talk. And by the time we get here, like I say, some people will buy Piccadilly Square. And then some people will still be hoping that the price market will go up again, and then the market will start coming down, like, it's going to correct. Then the market starts crashing all of a sudden, and then you go through this cycle, and people who have not cashed out of the markets will start to get into panic mode. As I've said, what we're waiting for is this point. And the reason why we're waiting for this point is this is the most profitable, and you can see is the point of maximum prosperity. If you entered here, is your point of maximum prosperity, because what it means is that you have cashed out with a very wide margin of profits. Let's take a very good example. So at the beginning of the year, Chainlink, which was about, I don't even know what's market capitalization Chainlink had then, but it was not in the top 40 at the beginning of the year. It was selling at maybe like $3 or $4. At the time, as at last month, I think Chainlink went up to like maybe 17 or 18. Now, if you bought Chainlink at that time, when it was going for $3 or $4, you more than, what am I saying, double is an understatement. You've almost done 400% of your investment. I like to give an example of CRO because, most of us knew CRO, and most of us were aware, or well, at least people in my crew were aware when I recommended CRO and said that instead of buying MCO at the time, because it was more expensive, that we should buy CRO, and that we should buy a bag and start buying, continue buying till the market starts to appreciate that, since MCO was set to going to appreciate there. And CRO was selling at, I think it was 3.5p in March. Yeah, it was 3.5p in March. Then April, it was about 3.6. Between April and June, CRO had gone up to about 10p. And by mid-June, it was like 12. By mid-June, I think it was around 11 or 12p. Then at some point, it almost went to 13p. Now it's back. Now it started to climb again because of the news that happened today of the DeFi introduction. It started to climb back to almost 12.5 already. Now, if you follow Chainlink, and CRO up until January next year, don't be surprised that Chainlink might be selling for £50, $40 then. And maybe CRO will be selling for, $5 then, because the market capitalization is stacking up, and people who are buying for the long term and are looking to cash out. But of course, we'll have that discussion. When January comes, I think we'll have that discussion when people start asking, when do I sell? Should I sell? And I remember someone asking me, okay, it was Mama Sita, asking me if she could sell LRC. And I told her, well, you could sell LRC because LRC had done 200%. And I mean, I done 120%. And if you sell 50% of 120, that's 60%. Your initial capital is out, your profit is still running. And then you can use that to buy other things if you're not using the money for anything. That's the psychology, and that's the mentality to have. Like I give the example, you can't go to the market to sell bananas and watch shows in the market till the end of the market and not sell your bananas. You'll be the one to lose. So you need to know when to enter and when to exit. In terms of our sentiment analysis, it's important to note that last week we were on 40 in terms of market sentiment for fear and greed index. And if you've been following me on this series for the last 6 weeks, you understand that this index is actually very valid. I think it's a very strong index, even though it looks very simplistic and harmless. Let me use that word. It's a very good indication of when to buy, because if you consider 3 weeks ago, we were at 78. The meter I was reading somewhere here, that the gauge was somewhere here, was 78. And I was saying then that it means that everybody has gotten greedy and that the market can correct at any time. And that's what has happened. The market corrected, and last week it dropped to 40. Now it's gradually coming back. Next week we'll probably get to 50 or more if nothing changes. If the price drops, then it will stay the same or go further. But it's a good index to have an idea of what the overall sentiment is. This analysis uses a multivariate inputs to determine the sentiment. So they have various levels of sources, and they use AI to sort of calculate the algorithm. So I think it's fairly accurate, to be honest, in terms of what you need to do. Like I say, when everybody is fearful, it's the time to be bold. When everybody is greedy, it's the time to be fearful, like Warren Buffett would say. So when you see the sentiment at fear, it's the time to buy, because everybody's running away at that time. So you can get it cheap. But when everybody's greedy, the market is overbought, essentially. And this is the sentiment data over 3 months. And you can see that it's indicative of, in fact, it almost mirrors the price action on Bitcoin. If I take you back to the weekly chart, it almost mirrors it. When it was at 40 up until around June, July, you can see that the market will, in fact, let me go back to understand. Just take a mental snapshot of this structure, and I'll go back to the weekly charts. Yeah. From here, where is that stuff? No, sorry, daily charts. You can see this is almost exactly what happened on the daily charts. So the market was in fear up until it went up to greed and it's come back to fear. Just to show you that it looks like that sentiment is actually a very good indicator of what's going on in the market. So having said that, time to explain some of the concepts I wanted to talk about today. And one of them was a simple explanation of how decentralized finance work. Now, the whole concept of decentralized finance is to take the power from the banks and give it to the people. That's the whole concept. And that coup is already successful. The banks are still on the back foot. They don't know, well, they know about it, but they don't know the full-blown implication of what's going to happen to them. Some of them are already making moves to try to diversify so that they can get a piece of the pie. Some of them are getting involved with venture capitalists to try to, get a piece of the, DeFi pie. But what's going to happen, or what's happening in DeFi, is everything that banks could do today, people are building platforms that will automate those functionalities, and you will not need any third party to do them. From lending to borrowing to fixed interest investments to loan syndication and to selling of and trading of assets, everything is going to go into decentralized finance in the years to come. Now, the first level is, trading, which is buying and selling of securities or assets, which is what's happening right now. That's about the primitive level. So at this level, what's happening is, instead of going to the normal exchanges, like the crypto exchanges like Binance, Coinbase, Bittrex, Bitstamp, Crypto.com. Those are centralized exchanges because they are being controlled from a central point of view. They're being managed by a company or a group of people, and it provides services from a central source, and everything is being monitored from a central source. Those are centralized exchanges that are working on the current model of cryptocurrency trading. From now on, you have the centralized exchanges where the buyer and the seller do not know themselves, well, they don't know themselves as well in the centralized, but neither do you know who the middleman is. You just connect your wallet to the platform, you buy what you want to buy for whatever price it's available and whatever volume it's available, and you go your way. No one can tell who owns the wallet that is buying, and no one can tell who owns the wallet that is selling. And everybody goes their own way and buy at the available price. So for the decentralized exchanges like Uniswap, Moonswap, Lightswap, and the one Crypto.com is doing now, you will have a group of people called liquidity providers. Liquidity providers are people who provide funds. So I'll use the Crypto.com app as an example. So we can use the Crypto.com app as a similitude of what's happening in the exchange, in decentralized exchange. Liquidity providers are people who are like people staking on the app. They provide liquidity for the app, they provide liquidity for the exchange. They don't take their money out for a period of time. And then because they don't take their money out and they're providing liquidity, they get rewarded. So on the app, you get rewarded, I think 18% or 14% or 12% APR, depending on your staking level. On the exchange, you get rewarded 20% APR for 6 months, depending on your volume. In the decentralized exchanges running DeFi, the liquidity providers will be required to provide both pairs of the traded currency. So if, let's say, Ethereum DAI, as an example, the liquidity providers will provide both pairs. It will be connected to the DeFi exchange platform offline, and then the user who wants to buy will connect his own wallet at the run time of the transaction. So if you've ever used Uniswap before, you notice that each time you want to use Uniswap, you ask you to connect your wallet because the wallet just gets connected for the period of the transaction. So when you connect the transaction, you connect the wallet, you pick the pair you want to buy. If there is liquidity pool for the pair you want to buy, you buy and you go. The difference here is that instead of the exchanges and the market maker and the exchanges setting the price, it's be the liquidity providers that will set the price. So you have to buy at whatever price is available. There are pros and there are cons. I can't go to the details today, but that's at a very high level. That's what the DeFi story is about. But this is like the most rudimentary use case, which is buying and selling using DeFi. In the future, or in the roadmaps of many of these applications, there will be lending, there will be borrowing, based on collateralization of other crypto assets, all happening through DeFi. Today, you can borrow from centralized exchanges using your crypto assets as collateral. But if you borrow from a centralized exchange, they know you practically because they have your KYC and they know who you are. If you're in the West and you don't want to pay tax on your whatever, on your crypto assets, you can use your crypto asset as collateral and borrow. Usually you have a loan to value ratio of about 50% and borrow against your crypto assets. And when you finish using the money, you can pay them at your convenience. But it doesn't hit your books as a taxable income because you borrowed it. So they provided opportunity for savvy crypto investors. But DeFi is taking it to another level eventually, where you don't have to, you don't have to worry about anybody knowing you, essentially. You carry out your transaction and you go. Like I say, it's a black market, or as Yoruba people say, Ojuolomo. For the purpose of people that are just joining for the first time, I just said that I needed to run through this again. The market cycle of a Bitcoin or the cryptocurrency market is determined by a phenomenon called Bitcoin halving. It basically reduces the supply of Bitcoin every 4 years. It's a counter-inflationary measure and helps to maintain the finiteness, meaning the limited supply of Bitcoin. And that is why Bitcoin has been of significant appeal to most individual and institutional investors in the last 4 years, especially. And what has happened is each time you have that phenomenon, the price starts to rise astronomically. As you can see from what we have here, the first time it happened, the price went to, I think, went to about from less than 100 to over 1,000, about 2,000. Then again, it happened, the price went up and hit almost 20,000. That was 2017, 2018. Then we have the one we had now, which was the one in May, where the price was around, the price was around 10,000 as at May. So the projection now is that you're likely to see Bitcoin anywhere between, based on all the projections that I have seen, anywhere between 25 and 150,000. 25 is extremely, it's unreasonable, to be honest. The least it can do, if you take this as a projection, so if you did 11,000 first time and it did 7,000 second time, you can say that the third time maybe it will do 1,000, which is times 10. And that sits immediately at about 100,000. So if you don't want to get involved in Bitcoin, or if you don't want to get involved at all in any altcoin and just, want to just keep your money, just buy Bitcoin and wait. In another 1 year, you have times 10 or times 5 of your money. Like I told someone, I said, that one nobody can debate it because it's not controlled by anybody. It's basically supply and demand. And because a lot of factors have contributed to demand in the last 2 years, this is probably just going to be much more than the projected 1,000 or 2,000% gains, because the supply that we had in 2016 and 2017 and the demand we had, they were pretty much at par. It was individual investors. But right now you have countries, you have large corporations, multinationals positioning to get into the crypto markets. So as I saw somebody, it's almost like a lifetime opportunity to become wealthy. It's not almost, it is a lifetime opportunity to become wealthy and financially secure. So this is what's driving the price. And the expectation is that the price should be sitting around this figure by the end of next year or before then. So in terms, when people ask, so how do I get involved? It's simple. Get a wallet, open an account, buy crypto, and hold. If you need a link, I can send you a link, and you can send me DM if you need a link. I'll send you a link for crypto.com. They'll give you $50 for opening an account with them. And you can just buy Bitcoin and hold. If you don't want to do anything, you can just buy Bitcoin and hold. Well, like a video, I don't have that video now, but there's a video that's going around. Somebody was so passionately explaining, what will you tell your grandchildren when, they ask you, what did you do when all this was happening? We use it, you're still on your fucking and doing nothing. So you have to do something. That's my appeal, or that's my counsel. And if you already have your bag, hold your bag tightly. It's very important. This is something I have from the previous slide, one of my previous slides about the state of currencies and why money is going to become worthless very soon. The US dollar is about 97% worthless. This $6 trillion inflation and injection, maybe it will not be up to 6 trillion, maybe 5 trillion or 4. It's still going to, it's going to cause a lot of dilution in the value of the market. So expect to see some fireworks, especially after the US election. I believe the coast will be clear then for the Bitcoin market, and then you can really see the true color of the currency. Now, this is another old slide that talked about various things that's happened from May last year, or from Q3 last year up until July. By the way, I don't know if you guys noticed, more and more European governments, countries in Europe are giving access to their stock exchanges to sell crypto. I had that news last week, but I found out that Austria, Sweden, Switzerland, quite a number of European countries have passed those laws in recent times. So for our people in Nigeria, I know that the Nigerian government is trying to clamp down on people and trying to block their destiny, as people will say. Please help yourself to help yourself, so that you will not be telling story in 2021. I think that's all from my end. If you have questions, either on Instagram or on Zoom, please pop me your question, and I think we still have wow. I've spent all the time talking. Please, if you have questions, please send me your questions. Sorry. Or unmute yourself here on Zoom.
Thank you, sir.
Good evening, Mr. Jide.
Good evening, sir. Thank you for the updates, as usual.
Any question of the day?
Not for me.
Okay. Does anybody have any question?
Yes.
Okay, go ahead.
Yeah, I just want to thank you very much for this lucid presentation as usual. Please, I just want to know your take on maybe when you have a very bull market and you convert your coins to stable, any of the stable coins like USDT, and when it crashes, then you can buy the at a lower price again and all this stuff. I wouldn't know.
Yeah, that's the general strategy for portfolio accumulation.
It may fail.
Well, it doesn't fail if you've already if you've planned your trade. Let me use that word. So right now, even though you are holding for a long term, you should still plan from time to time to bank some profits. So if you are planning to, especially if you are holding Bitcoins, and I say Bitcoins especially because Bitcoin doesn't move so much, at least not until you have serious bull run. So you need to determine at which point you want to take profits. If you say you're comfortable at 200%, you can take profit at 200%. You can decide to take fractional profits. So let's say I invested $1,000 in Bitcoin when Bitcoin was 10,000, as it stands about 10,000 now. And then I bought Bitcoin at 10,000. Bitcoin goes back to 12,000. It comes back to 11,000. Then I said, okay, the next time it goes to 13,000, which is 30%, I'm going to sell off 30% of my stake. You know, if I sell off 30% of my stake, my money is no longer 1,000 at that point in time. My equity is about 1,300. So 30% of my stake will not be 300 as it were. I will have moved out more than 300 from my stake. Now, if the market crashes and I buy back, just an example, if market crashes and I buy back my Bitcoin at 10,000, what it means is I have more Bitcoin than I had at the start of the transaction. Now, sometimes it fails, in fairness, where the market just refuses to come down and it's going and it's going and it's going. Like it happened to some of our people in Chainlink, and they were wondering what's happening. They sold off Chainlink when Chainlink was done ×3 or ×2, and they felt good with themselves. And then the markets, they refused to come down, and they now have to buy at a very high rates. So if you don't need the funds, I would say you take fractional profits. But if it's altcoins and you have like 5x, take profit too. Take profit and buy other things. That's my position. That's always been my philosophy.
Okay, thank you.
Because if you don't take profits You are hoping that maybe it's going to do 200x and it crashes on you and it goes back to
Where
original
is that one
position.
originated, Adi?
Hmm?
Where is that one originated?
The Bitcoin.
Yeah.
It originated from China. There is this guy. I'll tell you later. Sorry.
Sorry, Mr. Ogawale, were you saying something?
Yeah, I'm actually on my way to Liverpool as we speak. So I'm joining you from M4.
Okay, now.
Yeah,
well,
so yeah, thanks for the presentation this evening. It's been eye-opener, especially on the DeFi. Maybe you will take some more lecture for us on DeFi so that if you want to do some bit of trading,
yeah,
I
definitely,
said
definitely.
that if is capital IF, so that we can take
Yeah,
what the entry point is, what the exit point could likely be. So
yeah, no problem, no problem. As
okay, thank you.
as I said last month, I'll take there will be days where we'll talk in details about various aspects of DeFi. So definitely, I'll still have a subsequent session to talk about that. Mr.
Yeah,
David,
okay.
you have a question as well.
Yeah, that's just the only thing I wanted to say. Thank you very much.
All right. Go ahead, Mr. David.
All right, Doctor, good evening.
Good evening.
Well done. Thanks for the update. My question is this, on this DeFi stuff. So like you rightly mentioned about MXC, going into DeFi and all that. So I want to know what kind of opportunity can we participate in that space? That is one. Secondly, on the crypto.com, like you rightly mentioned about the CRO, which is also going into DeFi now. So how can we maximize the opportunity on that space too, because we who bought CRO and we are holding it, like that man rightly mentioned, how to take profit, and we stake it for like 6 months. So when my market actually appreciated reasonable amount, so but it was taken, so I could have cashed out maybe, now that it's coming, that I could have bought back and all that, but that didn't happen. So on that space, how can we now participate on this? I don't know how it's going to work anyway on this crew that is going into DeFi. How can we, maximize the opportunity? And lastly, you spoke about liquidity pool. So can one participate in providing a liquidity pool for any DeFi exchange? And if it's so at like how much should be the token? Thank you.
Okay. To be honest, I'm not really involved myself in DeFi because they are, they've transferred the risk to you completely by you getting involved in DeFi. And I brought out this page because I wanted to show you what the app looks like. The app has, you see, swap, pool, boost, and APY. Now, if you're doing swap, it means you're a buyer and you just want to buy 1 Ethereum with Crow, and then it means 1 Ethereum will give you 2003 for Crow. When you say swap, the people who are at the back end who have provided liquidity pool will get, Crow taken out of their liquidity to service your request, along with some Ethereum for Gaia for transactional fees. Currently, Crypto.com is providing 0.3%. What is that stuff? There's a 0.3%. What's it called now? There's a 0.3% transactional charges share where you share the transactional charges for the liquidity pool. So for each transaction, there's a 0.3% charge, and that 0.3% is shared between everybody that's within the pool based on how much money they put in the pool. I don't have that stuff here. I don't know where it is. But if you want to get involved, first you need to download the wallet. The wallet is on Apple Store. I'm not sure whether it's on Google Play yet, but I know it's on Apple Store as if you type in DeFi wallet, it should be the first thing that comes up.
It is on Google Play as well.
Okay. So if you type in DeFi wallet, it should pop up because I know they had an advert on it. So crypto.com wallet or DeFi wallet will bring you that wallet. That wallet is separate from your crypto.com app. It's like a decentralized wallet like Trust Wallet. The only thing is that you can use it to connect to the crypto.com DeFi platform.
Oh,
Now,
okay.
to participate in the liquidity pool, you will definitely click on, when you are inside the wallet, where is that stuff now? You click on pool here, which will bring you to, the amount of tokens that you can put into the pool. And then, okay, yeah, I needed to mention that thankfully Nigeria is not in the list of countries. For once, Nigeria is not in the list of countries excluded. Let me show you. So you have these countries excluded from the DeFi, yes, of geo restrictions. So I was immediately, and even US was excluded because I guess you need additional, what do you call, government approval to do this kind of thing in the US. So even guys in the US cannot be involved with DeFi because it transfers the risk completely to the user. Where is that?
Even the kind of warnings they will show self, you will be afraid to do it. No, I went on Binance and the kind of warning they put there, I just no go in there.
So this DeFi Swap, which is this platform that they've launched now, if I say connect to wallets, then I'll select the wallets that I want. So what they've done essentially is they've created a platform like Uniswap. It's a web platform like Uniswap. And then they will say, connect your wallet. So your offline wallet is what you connect here. Then you select what tokens you want. So currently, these are the tokens that they have and they provided liquidity for. So if I say I want Link, then, I will say, what do I want to buy with my Link? Maybe I have CRO I want to buy with my Link, and I'll do the swap. Then if I say I want to add liquidity, which is the pool here, I will need to connect my wallet as well. So as you can see, they are not responsible for holding any of the funds. They're just providing, the integration and the platform. So if you want to get involved, you go to crypto.com DeFi Swap Pool.
So no customer care.
Yeah.
No customer care, nothing.
So you can, connect your wallets at any point in time. So that's how much I know for now. Then I know
Okay,
that
that's
you can
clear.
stake.
That's clear enough.
Yes,
That's clear
well.
enough. Hmm.
Yeah, I know you can stake. If you stake, yeah, 1 year. That's a long time. Anyways, so that's about what they just posted it today, I think. So that's about how much I know, but based on how the other decentralized platform work, you basically at runtime when you need to carry out your transaction, you put in your connection to your wallet and you connect to your wallet. Once your wallet's connected, then you try to fetch liquidity. How does this affect the price of CRO? CRO is the what's it called? The token that the whole system is using from app to exchange to DeFi platform. So it will increase the demand of CRO. And as you can see, where is it now? As you can see, I'm trying to go to, I'm trying to go to the exchange. As you can see on what's it called today, you see that the price of crude has done some fantastic stuff. So you can see 6% today, just today, on the back of this news, because what it means is that demand for crude is going to be high. And if people are using crude to do the actual swapping, then the price may be higher. So crude is going to 16 cents now as it is. It's going to be higher because it means that whatever price is set there, people can easily use arbitrage to collect coins from other platforms to bring to the DeFi space. So it's a good thing. It's a good thing. It drives up the demand for the coin. If you're a holder of the coin and you are staked it already, most of my staking personally are 6 months. So I don't think I even have anything coming from any crew coming out until next year personally. But if you want to take some profits and you have to 3 months on the app, once your 3 months matures, depending on when it matures, if it matures between now and the end of October, you can take some profits confidently. If it matures between November and December, I would say don't roll it over if you need to use the money, because there will also be a price spike December, January. So you might be able to take some profit at that time. That would be my advice.
Okay, thank you. So currently, CRO is on 15 cents. So if one should buy it now and it goes up to 16, that's 100%, right? Or 10%?
It's about, less than 10%. You know that between 15
Less than
and
10%.
16,
Okay.
yeah, if it goes, okay, if you buy it now, okay, not even now. So now it's almost 16. It's 0.159. So if you buy it now, which is almost 16, and it now does 17.6, that's 10%.
Oh, okay.
Because that's 1.6 plus 1.6 is 10% of 16. So if it does 17.6, that's 10%. So depending on how you want to play it, I think we're going to see another
Okay,
move.
that means if it runs to 30 cents, that is 100%. Okay.
Absolutely.
All right. Copy that.
Yeah.
Copy that.
Dr. Demi,
Sir.
Everything that you put on stake, you have to unstake them and send some here, okay?
Yes, sir.
Okay.
All right, so thank you very much, everyone.
Thank you.
Have a nice weekend. I see you, I see you, AY, Mr. Sagwe. Quite a number of people that I've not seen here today, I've not seen before. Shandy, I see you.
Baba Dudu, great job.
This man.